It's the official start of earnings season, or as I like to call it, the one time every 3 months anyone actually cares about Alcoa. Investor Beat starts now. Thanks for watching. I'm Chris Hill. Yes, earnings season officially kicked off today. The Dow index was in the green. No thanks to Alcoa, which has been the worst performing Dow stock year to date. Joining me in studio today, Jason Moser and Matt Argersinger. Guys, our top story, earnings season. We had the jobs report last Friday too. As we kick off earnings season, how are you feeling as an investor?
Cautiously optimistic. I think we've all kept our eye on the job report here, and it seemed like the unemployment rate isn't really coming down, but by the same token, there are reasons to be optimistic at least. There are more jobs being taken. Granted, they're part-time jobs. The labor force participation rate isn't really coming down much, but companies have done a really good job of cutting down their cost structures, and so really what we need to focus on is just looking for that organic revenue growth, and that's really going to give us a good gauge onto the sentiment of the American consumer, which is really the majority of the economy anyway.
Obviously, all the companies going to be reporting. Is there one in particular or an industry in particular that you're going to be watching closely?
Oh, Chris, it's all about Alcoa. Sets the tone for everything. No. Jason's absolutely right. It's all about that top line revenue growth. And to me, I really want to see how the consumer is spending, how they're doing. Amazon, to me, always is the one I pay attention to because it's generally where all that spending is gravitating over time. And if Amazon's reporting top line growth, I feel like the consumer's doing pretty well. But yeah, it is about the consumer. It's about spending.
What about you? What are you watching?
Yeah, I love Maddie's Amazon call there. I just wrote an article earlier about this as well. We're in the face of sort of a rising mortgage rate environment now, which is kind of hard to believe. But I think there are some companies that will actually stand to benefit from this. I think Home Depot is a good look because with all of these refinances, I think people are going to be staying put in their homes for a little bit longer, and projects and renovations follow. And then Starbucks, I think, is another great one because as consumers get a little bit more money in their bank accounts or saving from these refinances, I think maybe Starbucks is one of those creature comforts that they might go ahead and indulge themselves in. So those are two companies I think that stand to benefit.
All right, let's get to some of the day's movers and shakers. Intel down after an analyst lowered the chip maker's earnings outlook because of lagging PC sales. Intel reports second quarter earnings next week. How big a red flag is this, do you think?
Big enough at least to take note. If you look at the PC segment of this business, it's responsible for about 65% of revenues, but about 90% of operating income. So it's significant. Look, Intel was slow to get into the tablet game, and so mobile is really kind of kicking them in the rear right now. But they are getting some part of that space now. They're getting in the game, and I think that when you look at it overall, Intel's a very big company, a lot of financial resources, 3.7% dividend yield. I think it's still a great stock to look at for income investors.
Dell up after an investment firm supported CEO Michael Dell's bid to take the company private. Are we almost done with this soap opera, or is this going to be going on for a while?
I can't. July 18th is the shareholder meeting, and I still don't think Michael Dell is going to actually get this for $13.65, which is the price he wants to take it private. The fact that ISS is supporting Michael Dell might shift a few shareholder votes in his favor, but you've got Carl Icahn in the mix. You've got Southeastern Asset Management, which is the biggest owner of Dell shares. They don't want to see the company go for this cheap, so I'm not convinced. I think this soap opera drags on longer.
Lovely. Back in January, Facebook unveiled a new search engine called Graph Search. After months of testing, it is being rolled out this week to all Facebook users. Is this going to help move the needle on the bottom line?
Well, Chris, they tested it, right? It should.
It's good enough for me.
I'm of two minds of this. I like the fact that they're doing something. They have to do something. But the problem I have with Facebook is they've been very reactive as opposed to being proactive or innovative. Graph search, to me, the problem is it depends a lot on what people input. And I don't think a lot of people actually have the desire to let everybody out there in their Facebook world know everything that they like. People don't really want to confide in their friends that they like the young and the restless and like to listen to the new kids on the block, right? That's
Ouch.
just something you keep a secret. And so I think that's where this is going to fall short. But all in all, it's a good move. It still doesn't justify the valuation today.
Did you just make a little personal confession there about your likes and dislikes?
Let's move on.
Starbucks reports third quarter earnings on July 25th, but shares hitting a new all-time high earlier today. Is it starting to get pricey?
I'm a little bit pricey. A lot of the big move in Starbucks is coffee prices, which have come down in recent years. That's really helped Starbucks' bottom line. At the same time, though, I look at the company and I see so much expansion potential abroad. Almost 2/3 of their stores are still in the U.S. They're going to triple their stores in China over the next few years, as we know. So I almost feel like it's almost like buying Coke in the 80s when Buffett did. A huge, ubiquitous brand, but still so much potential overseas. I don't think Starbucks will do as well as Coke did from the late 80s, but I think it's a market-beating stock.
All right, that is going to do it for Monday. Let's look ahead to the rest of the week. Jason, what's a stock you've got on your radar?
Yeah, we saw some news today. Berkshire Hathaway has upped their stake in DaVita, maker of dialysis machines. There's some concerns there with DaVita that they may be feeling a little pinch on the revenue side as Obamacare is sort of implemented here. That may or may not be real, I don't know, but that is certainly a specialized line of work. And so I like where this company is headed. And to see that Berkshire Hathaway's up in their stake in this company to almost 15%, don't make the mistake, this isn't a Buffett purchase. This is actually a Ted Weschler purchase. So this is his baby, and I like to see that Buffett's given him some room to run. So it'd be interesting to see kind of what comes of this. They have the means to acquire this company if they want to.
Okay, Maddie, what about you?
Wolverine Worldwide, big shoemaker, Hush Puppies, Koosh, Saucony, shoes that I don't really buy, but I know a lot of people do. Pretty trendy. So they were kind of one of the early consumer companies to report this earnings season. Just want to see how they do, if they're setting the trend for consumer spending for the rest of the season.
I thought maybe the Marvel character had IPO'd, and I just missed the news. All right, for Jason Moser and Matt Argersinger, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.
People on the show may have interest in the stocks they talk about, and the Motley Fool may have formal